What's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome to part two of all the stocks that Warren Buffett is buying during this current market meltdown or drop or crash, whatever you want to call it. A lot of stocks are down by a lot, and Warren Buffett went out and made a lot of purchases. In fact, this was the quarter that he spent the most money on since all dating all the way back to the financial crisis of '08. So it's been a lot of money that he's been spending, a lot of stocks he's been buying. Now, in part one, we talked about the stocks that Warren Buffett already owned, but added more shares to those positions. And if you want to see that video, you haven't seen it already, I'll link it for you down in the description. But in today's video, we're going to be talking about the brand new stocks that Warren Buffett added to his portfolio in this quarter. And there are 8 stocks here in total that are brand new additions to the portfolio, brand new positions. And I'm going to run through every single one of them in today's video. And as always, I'll give you my personal opinion on each one of them. And I'll let you know if I plan to buy any of these stocks myself anytime soon as well. So it's going to be a lot of fun. I hope you guys are enjoying this. Hope you enjoy the video. Hit the like button if you do. But let's go ahead and just jump straight into this. All right, now we'll be counting up from the smallest to the largest purchases, and coming in at the first stock on our list, that's going to be Ally Financial, ticker symbol ALLY, which Buffett purchased close to $400 million of in the first quarter. This is the last, most recent quarter here that his company Berkshire Hathaway has released their moves, and this one was close to $400 million here for Ally Financial. And this one is kind of interesting because Buffett has been selling out of bank stocks for a while now, which is what Ally Financial basically is. Their online bank offers traditional services like savings and checkings, while their Ally Invest segment provides investment advisory services. Like most other financial related stocks though, Ally has been crashing hard recently due to the weak macroeconomy and the fear of a looming recession if things don't start to improve soon. Buffett seems to like the dip though, and is likely buying even more now, considering that the stock proceeded to fall by even more in April after he initiated a new position in it. Now, up until this year, Ally was actually soaring coming off of the pandemic, but it has now proceeded to crash by over 30% from its highs. Now, financials are usually pretty good, but can sometimes be up and down depending on the economy and other factors, and analysts are expecting around mid-single digit growth over the next couple of years for their revenue. It's pretty boring of a kind of business for me personally though, and I've always said in previous videos that the only finance bank related stock that I really care to own myself is JP Morgan Chase, which I think is more attractive and gives me plenty of exposure to those type of markets. So I'll be staying out of this one for now, even though it does actually look pretty attractive from a technical perspective, with a valuation around 50% cheaper than the sector and a sweet dividend of about 3%. I will be sticking with my Chase stock though, as I feel that that's enough for me. Moving on to stock number 2 though, Buffett also purchased some shares of Markel, ticker symbol MKL, at over $620 million. Unfortunately for me, this is yet another fairly kind of boring stock, as they're mostly an insurance and investment related company. I like to as you guys have seen from previous videos, I tend to stick more with technology related companies, more exciting growth oriented ones. And so insurance and investment related companies, just not really ones that I like to invest too heavily in myself. But when looking at this stock, it has been pretty volatile, and yet it's also very slow moving. It's only up about 35% in the past 5 years, despite trading pretty close to an all-time high. The valuation is also mediocre, I would say, with a 17 forward PE ratio, and the financials can also be up and down at times without the consistency that you would typically expect from, a more kind of somewhat boring business like this. And they don't even pay a dividend to make up for that either. It's not a bad stock overall, but in a lot of ways it just feels kind of mediocre to me, and I think that there are better options out there in the market. Moving on though to stock number 3, that's going to be McKesson Corporation, ticker symbol MCK, at close to $1 billion purchase by Buffett. And this one is interesting because Buffett heavily sold out of biotech pharmaceuticals recently, yet he still purchased this healthcare solutions company that works in supply chain management, retail pharmacy, oncology, and special care. A large chunk of that business is distributing pharmaceutical drugs to tens of thousands of retail stores, as well as supplying medical devices and supplies to hospitals and doctor offices across the country. Unlike other stocks that Buffett was buying on dips, though, McKesson was already trading at an all time high and has continued to climb in literally every single month of this year. So I kind of doubt that Buffett is buying any more shares at this time. If anything, I really wouldn't be surprised if he actually started to sell some of his position as the stock continues to climb. Buffett is kind of notorious for buying when people are selling out of stock, and he's a lot of times sells when people are buying into the stock. Anyway, you could argue that their dividend for this stock is worth holding on to for the long term just because of the nice growth metrics on it, like a tiny payout ratio, a double digit growth rate, and almost a decade of consecutive growth. But my issues with this stock is that number one, the price itself is trading near an all time high. Number two, that leaves their dividend yield super low at just about half a percentage point. So it's not worth buying for just the dividend alone. And number three, I just think that their financials are a little weird. This is a massive company that does gigantic sales, and yet their profits are super low. Take last year, for example, where they did over $260 billion in sales, huge amount, but only a billion in profits. Or the year before that, where they actually lost money. And going forward, sales are only expected to climb by a couple percentage points per year because they're already so massively large. Yet again, the profits are not really too high. I just think that there's more exciting stocks out there in the market at better prices right now, so this will be another pass for me. Moving on though to stock number 4, that's going to be the first stock on the list that is worth over $1 billion in a purchase from Buffett, and that is Celanese, ticker symbol CE. And despite this being the first time that Buffett purchases the stock, he has already become the 5th largest shareholder in the company. Now, as far as their business goes, Celanese is a chemicals company that primarily sells acids and polymers that are typically used as intermediate chemicals for various coatings, paints, adhesives, papers, packagings, automotive products, and even electronics. And up until last year, Celanese was in heavy decline before the effects of the pandemic actually boosted their sales by both increasing market demand for their chemicals as the economy opened back up and businesses needed those chemicals for their products, but it also raised their prices because of the supply chain issues from that same pandemic, which increased, demand for the products that were in short supply, thus raising prices. So the result of all of that is that their sales actually skyrocketed to a new record high last year and are still expected to rise by another close to 10% this year before falling back down to the typical low growth that you would expect from a company like this. Still, the move by Buffett was probably a smart one because the stock crashed in January and February when Buffett was likely making his purchase, and has since been climbing by a small amount in each of the following months ever since then. Currently, though, the stock is still up a huge amount following the pandemic lows, and while I do love their dividend for the excellent growth metrics on it, the yield is just not quite high enough at less than 2% to really attract me to the stock in any major way, so it'll have to be another pass from me. All right, here we are moving on now to stock number 5, and we've got Paramount Global, ticker symbol PARA, which is the giant corporation that owns major media properties like Paramount Pictures, CBS, The CW, Comedy Central, MTV, Nickelodeon, BET, CMT, and Showtime. And it also includes their streaming service called Paramount Plus, which is home to popular shows like Halo, Star Trek, SpongeBob, and more. And that's already reached close to 40 million subscribers with both a $5 ad supported version and a $10 ad free version. So pretty affordable subscriptions there, and at different price points depending on what your need is. Now, Buffett purchased more than $2.5 billion of the stock during the first quarter, and since then the stock has been kind of all over the place, so it's a little hard to know if he's still buying it, but from a longer term perspective, it's already lost about half its value over the past 5 years, leaving it with a pretty good valuation of a PEG ratio of less than 1 and a dividend yield above 3%. The company is also solidly profitable, and while their sales did dip back in 2020, they seem to now be back on track to their usual growth of around a mid single digit percentage. As this, I would say, is a classic value play here by Buffett, and I'm guessing that he may be buying more shares throughout this year as well if it continues to struggle. Personally, I do actually like the stock at these levels, but I already have so much exposure to the video streaming market through Disney and Amazon that I just don't really feel like I need to own this one too. But it is one that I have on my watch list, and I do enjoy tracking it. All right, now we are now moving on to stock number 6, and here we've got Citigroup, ticker symbol C, which is famous for owning the popular Citibank that currently holds the fourth most market share in the US by deposits at around 5%, and also the fourth largest by assets at around 10%. Now, this one is a little peculiar because Buffett recently sold out of Wells Fargo completely, but decided to buy back into Citigroup after having sold it about 20 years ago. And it was also a pretty large purchase too, at close to $3 billion, making it now one of Buffett's top 15 largest stocks, and also making him the fourth largest shareholder in the company. As far as the reasons why, it's probably just another classic value play by Buffett. Citigroup stock has been one of the worst performers among the big banks recently, having now lost about 15% of its value over the past 5 years, and is currently down more than 35% from its 52-week high. As far as financials go, 2020 was a big hit. 2021 was a big recovery, and going forward, they're expected to grow by very low single digit percentages per year. The valuation is pretty good though, as they now trade about 30% cheaper than the sector and carry a dividend yield of close to 4%. That's not bad at all. But as I mentioned to you guys earlier in the video, the only bank stock that I really care to own myself is JP Morgan Chase right now, so I'll be staying out of this one too, at least for the time being. Okay, that brings us now to the final two new stocks that Buffett purchased in the first quarter, and coming in at number 7, that's going to be a stock that sort of came out of nowhere for Buffett to be buying, at least in my opinion, and that is HP, ticker symbol HPQ, otherwise known as Hewlett Packard. And you guys probably know about them for mostly selling computers and printers throughout the years, which is obviously not a very high growth market, but they do also work in cloud computing servers and IT services for corporations as well. Overall, though, you're just not going to see very much growth from a company like this, if at all. I mean, 2020 was obviously a down year, while 2021 was obviously a recovery year, but moving forward, sales are expected to basically be flat over the coming years. What HP does have going for it, though, is billions of dollars in free cash flow every year, which supports a high growth dividend that already yields close to 3%, and yet it still carries a tiny payout ratio of only 20%, a double digit growth rate, and a double digit growth history. And despite the stock already being up close to 100% in the past 5 years, the valuation is actually more than 50% cheaper than the sector on several different metrics. So I'm betting that Buffett bought this one as more of a kind of specific value dividend play, a company that has, ample cash, a lot of free cash flow generation so they can support the dividend, and he probably bought it more so for that than anything else. But for me, it's just not exciting enough of a company or a stock to make me want to go out and buy it. I think there are much better options in the market, so I'll be staying out of this one for now. All right, guys, that leaves us now with the 8th and final stock, and for this one, we've got Occidental Petroleum, ticker symbol OXY, who is of course a giant oil and gas company, and like I mentioned in my previous video, Buffett has been all over the place with oil stocks in recent years, like selling 66 in 2019, but buying Oxy and Suncor, then selling 66 again in 2020, while also fully exiting Oxy, but buying Suncor again, only to sell a large chunk of it later in that year, but also buy into Chevron, which he later sold more than half of last year, only to buy more of it again this year, and of course buy back into Oxy once again in the first quarter here as well. It's literally been a roller coaster ride for Buffett and Big Oil, but so far this year, it's looking like it was a really good bet. I mean, Buffett made sure to gamble a super heavy amount on the rise of oil prices, and so far it's looking like it paid off. This was the largest purchase here in terms of new stocks for the quarter at over a $7 billion purchase, making him now the number one largest shareholder in the company. And because of the record-breaking rise in gas prices and the huge demand for oil right now, Oxy has been flush with extra cash that it's been using to buy back stock and regrow their dividend, which they had previously cut, I believe, in 2020. Now, over the past year alone, Oxy broke their free cash flow record by generating close to $10 billion. The result is that the stock has skyrocketed in recent months, climbing by almost 130% this year alone. Personally, though, I don't have any long term interest in oil producers because I just think that the higher growth will be in renewables over the very long term. And I also don't want to buy a stock like Oxy at such high levels. By the way, even with the recent increase in their dividend, it's still yielding just less than 1%. So it's not really that attractive of a dividend either for me. So while I'm glad that it's working for other people who own this stock, and I absolutely, of course, I wish them all the best with their position in Oxy, it's just really not a stock that I plan to ever own myself. That does it for this video though. I hope you guys enjoyed it. Let me know down below what you think about all of these stocks. Do you own any of them? Are you thinking about buying any of them? For me personally, I see a lot of kind of mediocre stocks on here. I think Buffett was really looking more for value plays and not focus so much on long-term growth potential or exciting businesses, which are things that I tend to look more for in the market as that type of long-term investor myself. So there's not really a lot in here for an investor like me, but that's okay. That's the nice thing about the stock market. We can all have our own different investing strategies and different things that we look for in a stock and a company. So let me know if you like any of these stocks, or do you agree more so with me that they're just not very exciting and there's better options out there, better growth oriented stocks out there that are still trading at some amazingly low prices right now during this market, volatility that we've been going through. So I'd love to hear all of your thoughts down below. I'll try to respond to as many comments as I can, but I hope you're all doing well out there, and I will see you very soon in the next video. I'll catch you guys later. Take care. Bye bye.